I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. U.S. corn exports could get a slight demand boost after Thailand opened the door to U.S. supplies. Bloomberg reported that the country plans to scrap tariffs as well as raise its corn import quota next year. The move will help Thailand meet its pledge to buy more U.S. farm products in exchange for lower U.S. tariffs. Earlier this year, the U.S. agreed to lower tariffs to 19% instead of the previously threatened 36%. A Taiwanese government spokesman said that the government will raise the annual quota for feed corn imports to 1 million metric tons, up from the current 54,700 metric tons, and it will also cut the existing 20% in quota tariff to zero. If most of that tonnage increase went to the U.S., that could total up to nearly 40 million bushels in U.S. corn export demand. Recent policy shifts would already support demand for U.S. corn compared to other competitors in Southeast Asia. U.S. soybean export hopes have fizzled out recently after sales to China appear to have stalled. Bloomberg reported that Chinese imports of U.S. soybeans have fallen through following a flurry of orders late last month. According to data tracked by Bloomberg, China's soybean stockpiles at the end of October were at the highest since August of 2021. Chinese crushers may still need some imports during December and January before Brazilian supplies come back online in January, but that may not be enough to meet the 12 million metric tons the Trump administration said China promised to buy through the rest of the year. U.S. soybeans still face a 13% tariff, which makes American prices less competitive compared to South American supplies. Brazilian soybeans remain relatively cheap to ship to China following the recent surge in U.S. prices. And bar chart data shows that the cost of shipping soybeans to China was about $484 per ton. Meanwhile, the cost of shipping soybeans from the United States to China was about $507 per ton. As U.S. sales to China have gone quiet, traders told Reuters that Chinese importers continued to book Brazilian soybeans for December delivery. And now that the U.S. government reopened on Thursday, the extent of China's U.S. soybean purchases should be more known in the coming weeks. Moisture deficits are creeping back into major growing regions for Brazil following lackluster rainfall for many areas. Precipitation totals have been below normal for the past 2 weeks, according to World Ag Weather. Deficits are the largest in Mato Grosso, which supports about 25% of the country's soybean production. Meteorologist Eric Snodgrass with Nutrient Ag Solutions says the next couple of weeks will be critical.
I need to know if that dryness there, which by the way, that's probably 60% of Brazil's growing area that I just circled. If that area sees another 2 weeks of lackluster rainfall, you just have to wonder, because it's going to get hot in there too, what that might do to the soybean crop that's new.
Still, Snodgrass says it's too early to sound the alarm. Brazil's soybean belt can recover quickly with just one good soaking rain, and expanding acreage often helps offset lower yields. According to consultancy firm AgRule, soybean planting reached 61% complete as of November 6, lagging behind last year's pace of 67%. In Mato Grosso, progress slipped below the 5-year average at 86%. On Thursday, Brazil's National Supply Company, or CONAB, lowered its 2025 and 26 soybean production forecast slightly to 177.6 million metric tons, which was still at a record. However, the agency did note that planting has been under less than ideal conditions. And the agency did raise its corn production forecast from last month, largely due to higher expected corn acreage. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.